Stay seated, everybody, because we do not have a coffee break, but a last-minute edition in West Red Lake Gold Corp with Gwen Preston.
I've got to make a picture of this.
Hugh is on the board of West Red Lake. So it's a good continuity here. Hello, everyone. Thank you for your patience and the surprise of another presentation when perhaps you thought you were going to have a coffee break. But I will make it worth your while to sit here instead of drinking coffee, I promise. West Red Lake Gold Mines, long name. Perhaps at some point we will change the name. Oh, there we go. Sorry, the clicker wasn't working. Because 5 words is a really long name, but that's okay. This is a company that came together about 2 years ago when Frank Justra, obviously very successful and well-known mine financier, mining company builder, got together with somebody named Shane Williams, who is a really experienced mine builder. And the two of them shared a vision that we're going into a strong gold market and that the best way to provide returns to shareholders in a strong gold market is with aggressive production growth. So they decided that they wanted to build a new mid-tier gold mining company. Now they needed a foundational asset for that company, and they found that in Red Lake, which interestingly enough is where Frank Justra had his first major success. That success was related to the Red Lake and Campbell-Koshner mines that are just up to the northeast of us. Our main project is that Madsen project that's down at the bottom of the map. We also own the Rowan project that's just up to the northwest of us. Madsen is a project that has a history. So it operated for 36 years back in the middle of the century. Really successful mine, 2 million ounces of gold pulled from rock that averaged 9 grams per ton. The old timers did some great exploration as well. They ended up finding a particularly rich part of the system way down at 1,300 meters depth, and they liked it so much that they sunk a shaft all the way down to that 8 zone. So really good operation for its time. In the 70s, the price of gold fell off. Things like dewatering that shaft were too expensive relative to the price of gold, and it closed. The next real effort at the site happened from 2015 to 2022, and that's when a company called Pure Gold owned the Madsen Mine. Some of you may be familiar with Pure Gold. They did a bunch of very good work. They drilled 180,000 meters into the gold system. That defined the resource that we're still working with, which is 1.7 million ounces at 7.4 grams per ton gold, all of that in the indicated category. And then they did a feasibility study, they engineered, they permitted, they financed, built, and put this thing back into operation. Unfortunately, the team that did that didn't have deep experience with high-grade underground gold mining, and they made some missteps along the way, missteps that were costly enough that the mine went bankrupt after 14 months of operation. So this is an asset that went bankrupt 2 years ago. That was October of 2022. That's the elephant in the room that I like to acknowledge and then hug because it's really present. When it went into bankruptcy, the group that had lent them the money to build the mine, which was Sprott Resource Lending, took the asset, and then we bought it from Sprott Resource Lending. This is an asset that Pure Gold had put $350 million into. We bought it for $6.5 million, plus a 1% royalty, and about 20% of our company. So that's how we got to own the Madsen Mine. This is a view of it. The blue building there is the mill that they built, which is a really fantastic piece of infrastructure. The tall building is the head frame above that shaft that goes down to 1,300 meters. What looks like a muddy body of water in the background is the tailings dam. Behind that is the water treatment facility. Underneath all of that is Pure Gold did 19 kilometers of modern underground workings. This is what we bought with that 1.7 million ounces of gold. I do like to draw some attention to the mill. The mill is really good. The mill was not part of the problem under the prior operator. It achieved 95% recoveries and is the right size for this underground gold mine. So the mill is great. Of course, there were aspects that weren't so great. Otherwise, it wouldn't have failed. So, excuse me, what is it that went wrong with the prior operator, and what are we doing about it? They did 180,000 meters of drilling, so you might or might not be surprised when I say that, unfortunately, that wasn't enough drilling. This is Red Lake, Ontario. The veins here, the gold here is in narrow, high-grade veins, and the gold is not evenly spread along those veins. There'll be a lens of gold, then there'll be no gold, then there'll be a large lens, then there'll be a bunch with no gold, and on and on. In order to be able to mine a system like this effectively, you need to hammer it with drill holes. Pure Gold engineered their mine with drill holes that were on average 20 meters apart in their resource. 20 meters apart is fine for defining an indicated resource. It is not sufficient for engineering a mine. We believe that you need 6-meter spacing between your drill holes to engineer a mine, and that's what this stack of images tries to explain. The purple ribbon is the resource. They mined the entire purple ribbon and then some. They did not use the most selective mining methods, so they mined the purple ribbon plus some of the rock around. Because only part of the ribbon is mineralized and they diluted it, they delivered to the mill rock that averaged 3.5 grams per ton when they expected 8.5 grams per ton. So that's not a good starting point. We have done 45,000 meters of infill drilling in the last year. Infill means into the known resource between the holes that are there to tighten up that drill hole spacing. And that's how we're defining the red lenses of mineralization. Our plan is to mine the red lenses of mineralization, and there will be some dilution, that's part of mining. Send those to the mill, and by doing that, be able to deliver material to the mill that is the expected 8 grams per ton. So infill drilling is fundamental to our approach to making the Madsen mine work. When you do the infill drilling, then you incorporate that data into your resource model in a couple ways. First, you put the numbers in just from the drill holes. That takes you to what we call a short-term model. Then you manually update that model based on what you see in the rock, maybe what chip samples you're taking when you're underground, what else you take note of when you're underground. That gets you to what we call a local model, and then you apply a confidence requirement before you decide to engineer mining into that area, design stopes. This, I know that was a lot of technical things that I just said, but this is fundamental. This is how we are mining Madsen differently and why we expect that we will be able to deliver mineralized material to the mill that is the grade that we promise it will be. So Pure Gold, first issue was that their delivered grade was way lower than it needed to be. Their other issue was that their cost per ton was considerably higher than they expected. There are a couple reasons for that, but most of them stemmed from a company that tried to build a mine on the smallest budget possible. And that had a few results. One is that they pushed costs, whatever costs they could, they pushed from construction capital into operating capital. So they leased a lot of things so that they paid for them during operations. That increased operating costs. And they also decided not to do quite a few projects that would have made for a more efficient mine. Efficiency and cost savings in most things go hand in hand. They certainly go hand in hand in mining. And by not doing those projects, they ended up with a pretty inefficient way of moving material, processing material at the site. This connection drift is like sort of the prime example of that. Their plan was to collar a nice new portal that's there labeled the East Portal. It's big, it's got a smooth ramp, and they wanted to take that all the way down into what's called the Austin. They didn't have enough money, as I said, so they changed plan. They went to the historic West Portal, which is much smaller, can only take small trucks, and requires this very twisty, turny, steep in places, long route to get over to South Austin and Austin. When they took material out of the West Portal, then they had to drop it, reload it onto surface trucks because they had to take it across public roads. The whole setup was very inefficient. That green line that you see here is a connection drift, a 1.2 kilometer tunnel that we are halfway through building so that we can use the nice, shiny, new, large, smooth East Portal that's right beside the mill to take the rock out of the mine. That's the kind of efficiency underpinning that we're putting into place at the Madsen Mine. There's quite a few other similar projects. I mean, a maintenance shop so that you can have good mechanics, so that your underground equipment is available on a regular basis, also of cardinal importance in underground mining. Proactively doing the tailings dam lift, so that's not something that's staring you in the face. Buying and installing a permanent primary crusher, that was not something that was done. It was a temporary installation. It didn't work very well, and the leasing costs were very high. These are the capital projects that we're doing to give ourselves a solid footing for an efficient mine. Put this all together, our goal is to have this mine producing gold at 800 tons per day through the mill in about a year. So that means the gold dashed line down the middle there marks when we will put out our pre-feasibility study. Now, it seems like it's a bit late to be putting out a pre-feasibility study when gold production is truly like around the corner, but that's just the nature of what we ended up with. We bought a project that was already built, where the resource was already there, the permits were already in place. There were things that needed to be fixed, so we raised money and started fixing the things that needed to be fixed while we developed the official mine plan that we could release to the public. That mine plan is going to come out in the next few weeks. Alongside that, that mine plan will define probably about a 7-year mine life. It's going to be a conservative approach. We want to deliver a mine plan that we know we can do, because remember how this thing failed just 2 years ago? We need to make sure that what we say we're going to do, we can do and hopefully do better on every metric in this pre-feasibility study. At the same time, we have a very detailed internal mine restart plan that is well advanced. In that, we plan to turn on the mill at the end of Q1. We're already test mining, putting bulk samples stockpiled on surface. We'll process those bulk samples early in our mill operations, and then we will just gradually transition into production mining and production processing so that we're 400 tons per day and breaking even by the middle of next year, and then we ramp up to 800 tons per day by the end of the year. That's the plan for next year. If you look at our share price, we've been fairly sideways. I think that the reasons for that are we didn't have a study out, so people didn't know when the mine was going to turn on and how much it was going to cost to do it, or what the mine was really going to look like. The study is imminent, and I think will really help clarify how close we are to production. And additionally, we just raised another $27 million and signed a debt facility that collectively gives us access to all the money we need to get into production. So by the time we hit the beginning of next year, we'll have a mine plan, the market will see that we have the money, and production will be right around the corner. We won't be in a position of needing to raise money again, and we will be a rare story with a new gold mine going into production in this gold market, which to us is an exciting investment thesis, because one of the strong ways, lower risk ways to play a rising gold market is through new production and production growth. That's where I'll stop. I'm happy. There's lots more that could be said about the Madsen Mine, and I'm happy to chat with anybody about it outside, or if anybody has questions right now.
Thanks, Gwen. Yeah. Great presentation. You obviously have the advantage of a lot of sunk costs from Pure Gold and the previous operator. How much money is it going to cost West Red Lake to get this back into production?
So what we just accessed was $27 million in a financing and a $35 million US debt facility. So call that 68, 70 million Canadian. We did that when we had $20 million in the bank, and that's the amount of money, including contingency, that we believe supports us, including corporate costs, to the middle of next year, which is when the mine is churning through 400 tons per day and it supports itself. Okay. So that's our number right now.
Great. Any questions from the audience?
How many employees do you have in this mine?
Right now we have 150 at site. We'll probably ramp that up to around about 200 by the time we're in full operations. We currently have some contractors who are just supplementing while we staff up, but those are the numbers.
Anyone else? You in the back?
What do you estimate your all-in sustaining costs will be?
So, I mean, I'm certainly not supposed to say that number when we have a pre-feasibility study right around the corner, but I will say that there are some very good analysts out there who have done good assessments of what that pre-feasibility study is going to look like, and they peg it at around $1,450 or $1,500 US as our all-in sustaining costs.
Okay, thanks, Gwen. I'm sure you're available for any questions.
I'm absolutely available.
Okay.
Thank you all so much.
Thanks so much.